really add that edge to your portfolio. These funds, remember, carry all of the risks of regular mutual funds, but they also come with some other additional risks, which I think is, important for anyone to understand. There are also a whole host of different ways that you could look at gaining international exposure. So to understand, how you should look at this, what your strategy should be, we have Tarun Birani joining us now. He's founder and CEO of TBNG Capital Advisors. Tarun, first of all, thanks a lot for coming down to the studio for this show. And, I am looking forward to this topic because we get a lot of questions on these as well. So first off, just to start, take us through what you think are the key benefits of looking at international funds, because it is a lot more complicated than, looking at a straight up Indian mutual fund. But tell us, what is the key benefit when you get this kind of exposure?
Right. So good afternoon, Pavitra. Thank you for having me here. I have been traveling across, and when I visited, let's say, Australia, when I visited Singapore, all these countries, I realized that the investor, local investor, never think like only investing in Singapore, only investing in Australia. They look at things much more globally. Okay, maybe the big reason is the capital account convertibility, free access to dollars, and all those things is the big area.
Maybe growth in markets like India also.
Right. But that has its own pointers. I will cover that. But that is one big reason I see large part of the developed markets look at investing in a much more holistic way, right? So I feel international investing is one of the very important part of investing. Coming to advantages, very big advantage is you are diversifying outside your home country, right? So we as investor, I always have a home country bias, right? I look at things only on a domestic way. I will only track RBI policy. I will only look at what is happening in India. But once your portfolio is of some size, I feel it is very important to have your portfolio outside India to avoid those kind of risks. The regular benefits of diversification is one reason. Second big reason is access to a lot of market leaders. I have seen a lot of companies, a lot of sectors are not available in India. Let's say if I look at artificial intelligence, robotics, clean energy, ESG, there are a whole host of sectors which are not available and have access to the global leaders in those space. So that is one way. Once you want them in your portfolio, they can bring more stability. Apart from that, and I think it has been a case in the past, if I look at last 10 years, 15 years, currency has been one of the very big return earner for anybody who has invested outside India, because rupee has been depreciating all over. Maybe the trend has changed now, and I look at things very differently in next 5-10 years. India looks much stronger to me. Dollar doesn't look that positive to me. So there are a lot of things which are different now, but currency is also one of the big way one can take benefit from that. And apart from that is potential for higher returns. In India, I will only look at only a developing country. But let's say my portfolio and which stage of life I am in, right? From a suitability perspective, if I need more stability, I need developed market. I need companies which are in a different cycle, right? So access to different market cycle is also one thing investor can benefit, and that can change their return profile over it.
Oh, absolutely. And we'll talk more about how you should really decide your strategy, what method you should use to really get in. But like I was mentioning, these funds carry all of the risks of regular equity mutual funds, but they do come with some additional risks, whether that's geopolitical risk, currency risk. You want to just take us through some of them, because it is important to understand that there are very specific complexities here.
Right. So, Pavitra, risk is everywhere, right? Like you're walking on the road, you're flying, everywhere risk is there, right? Risk you can't mitigate, but yes, risk you. Risk on international funds, I feel one of the big risk is currency. I think it can be advantage, it could be risk also. If you see very large movement happening in currency, and we have seen, let's say, countries like Russia, where very large movement happen in a geopolitical space there, right? Anybody who has been an investor there would have got some negative currency movement thing there, right? Apart from that, one of the very important thing is political and economic risk, right? In that specific country, how politically those countries are moving. I have seen China is a great example. If I look at 5 years back, there has been a lot of investment recommendation coming on the China funds and the China investing ideas. But if you
Because
look
it's so
at
cheap.
yeah, so if you look at last 5 years, returns from all these categories have been very less or negligible, right? So I think that is one very big area where, due to changing geopolitical scenario or the manufacturing lines setting up outside China, all these have one of the factors. So maybe we can reflect back and learn from mistakes made in last 5 years. So that is also one thing. And the cost, I would say international investing comes with higher cost compared to you investing in India, because there are layered costs. You have to pay cost there also, here also, fund of funds, whichever route you take at. So that will come at higher cost.
Okay, so that is an important point for any investor to note for sure. But Tarun, when you're looking at an international fund, you could get exposure either via a global fund or an ETF or an Indian fund which has a sizable international exposure, right? We have so many funds in the last year that have done exceedingly well because they were exposed to the AI pack. So is there any big benefit in picking an India fund over, say, a global ETF?
So this is again a suitability which you need to do, where you are in terms of your portfolio, what are your requirements, things. And this is very critical. Let's say if I'm looking at funds for my kid education in US, I need more dollars, right? So I want most of my assets, which I want to build for his future, his or her future, in dollars. So maybe I will take a global stock or a global ETF route, and that will give me access to dollars for his studies, right? But if I am a normal investor and I am not looking at any such things, maybe I will look at the local fund of funds route. That is much better for me because the local regulation is there. I have more comfortable managing it under the SEBI spectrum of managing funds. So all those are very big benefit if I look at local funds of fund kind of thing. And taxation and all those are also different. So you'll have to look at
that. And with Indian funds, you just feel like you have more information, right? Because everything is put out over here. There's a different regulation in place. So that could be a bit of a hindrance. A very interesting chat. I have a lot more questions on, what your strategy should look like, the kind of markets that you should look at. We'll get to that in just a bit, but we do need to take a short break. We'll be back in 2 and we will continue this conversation on the other side. Stay tuned. Hey guys, welcome back. You're still tuned into MF Corner here on CNBC TV18, and I have with me Tarun Birani, who's founder and CEO of TBNG Capital Advisors. Tarun, we've been talking about international funds. Tell me, how much of your portfolio do you think you should allocate to international funds, considering the risk, considering, maybe a little bit of a lack of information as well? How much do you think is a good amount?
So I feel allocating anything requires a very detailed suitability analysis, and every person has a very different way to look at things, right? So I think the stage of life you are in right now. So at the starting stage, or you are just started building up portfolio, I would say start with an India dedicated portfolio, because you need to first get in there, right? Get in basics of understanding.
No, that is understood. I'm saying if you're looking at an international fund, then how much do you think is good to allocate?
No, so that is again where you need to check on liquidity requirement. You need to look at investing experience requirement, how complexity of product you are okay with. But normally a 10 to 15% of a portfolio is something one can look at to initially kickstart investing into international investing, because there are a lot of ways through which you will have to deeper analyze whether it suits your risk profile, whether it liquidity profile, your long-term suitability.
Okay, got that. So 10 to 15% is, of course, there's no one-size-fits-all approach, but this is some amount you can look at. And what kind of time horizon would you recommend? I mean, is this a standard what you would recommend for an equity fund?
I would say you should look at a longer time horizon compared to normal Indian funds, because again from a country, risk could be very different compared to a domestic risk what we look at. So maybe a minimum 5-year horizon should be minimum if you look at equity global funds to start with.
Okay. You should put in the kind of time horizon, but within international funds there's a whole host of offerings. You could look at a country-specific fund, a region-specific. It could be like a theme that we spoke about, right? Like AI maybe, or the semiconductors. How do you pick which one is correct for you? Because do you think that you investor, because you are essentially picking, you're deciding at least one part of the basket, which could go right or wrong. But do you think you need to be slightly experienced for that? So,
Pavitra, I started with the suitability, and according to me, that's where the magic of investing or wealth creation is, right? So safety, stability, aspiration, these provide the goals of a client, right? From a safety perspective, stability perspective, and aspiration. So stability, I think a lot of index funds globally can give you a lot of stability. But when it comes to, let's say, high risk ideas like a AI fund or a tech fund, I feel they are more aspirational. They can go either side, right? In terms of positive or negative return. But you have to look at various themes right now. Last 10 years have been a theme. Last 2 years, if I look at specifically, interest rates have gone up globally, right? And in India also we have seen that happening. I feel one of the very large theme currently is the interest rates coming down. Even in US, in India, we are seeing coming that, right? So next couple of years, I feel the large opportunity is the bond duration strategy. One can focus on building some assets into, let's say, US longer bonds. That is one area one can benefit. I think there are some multi-decadal themes also. Again, it depends on your risk profile and the appetite. AI is one, or let's say technology as an overall sector is a very large opportunity to my mind. So somebody who's an appetite for say 10 years, one can look at. Again, apart from that, we should not discount countries like China and all, because I feel somebody who has run up gone down so much, value to value trap, what we are saying now, it's available right now. And for a country like China, if you have a 7 to 10 year horizon, I think it could be a very interesting dark horse right now available. So it all hold the funds for a longer time, but I feel there are a lot of interesting possibilities or strategies available. So just with China, because especially this week we've been all talking about the collapse that we're seeing in the Chinese markets. There's two ways to look at it. One is that valuations are ridiculously cheap. Second is, why are valuations so cheap? What has gone wrong? And what is the kind of duration that you see it getting fixed in, or that you see a recovery in? So would you right now recommend a China or Hong Kong fund to someone who has a good risk appetite and is willing to stay invested for 5 years? So I am no expert in understanding that country specific risk that much, but what I have generally seen, India, China, US, these are three largest economies of the world, right? Right now as we talk. And China, I think last 3-5 years, we've seen capital markets not doing well. And everything is, what we are hearing is negative right now. But I feel in investing, one who has a contrarian view gets benefited also of that scale. So if you have an appetite, it is quite possible next 5 years this story may not pan out. But if you have a 10-year kind of horizon and you have a risk appetite, allocating some capital, I think China could be an interesting story for them.
Okay, very interesting. But I think, like you pointed out, very important to check whether you have that kind of, long investment horizon, whether you have the guts to stay in types of funds are taxed. So you want to take us through how international funds are usually taxed, because there's a bit of a different approach.
Right. So that is one area where there have been some changes which has happened in last 1 year.
Yeah.
And you have seen, and I tell you, government look at money. We are a capital starved country, right? Largely, I think last 20 years, the policies of government has been to get more dollars in the country. But as we talk, we have, let's say, around $600 billion already in the forex reserves. And my sense is next 5 to 10 years, you will see every year $100 billion more adding up in our coffers. You will see, this is my gut feel, that 1 or 2 years you will see government allowing more and more investors to invest outside India. They will make my outlook. Okay. And if that happens, you will see more and more investing opening will happen. The way LRS has been disadvantaged, it's not disincentivized right now. So that could happen. But the normal tax structure right now is less than 3 years. You have a full taxation which you have to pay, but more than 3 years, you will have to pay 20% tax, which I feel somebody who has an outlook and a long-term thing, I think one can explore investing.
All right, so that is the complete picture on, how you can look at international funds, the strategy that you should, maybe take into consideration, all of the risks as well, and how they are taxed. But with that, we're going to have to wind down on this edition of MF Corner. Thanks a lot for tuning in. We have closing bell on the other side to take you through the final hour of trade today.
Themes you have done recently?
We've done lots. Yeah, I've done things on NFOs and stuff as well, because, there's been this to us. अभी मेरा है, हाँ, प्लीज ये बंद मत करो.